RBI Governor Shaktikanta last week announced a 3-month moratorium on EMIs during March 1st to May 31st. Great news for borrowers? Well, maybe not. Taking the moratorium benefit could actually turn costly for you. Let's understand what RBI's announcements mean and should you really opt out. As a fallout of the ongoing COVID-19 pandemic, our incomes might be hit. And to tide over this crisis, the RBI has given a relief to borrowers. A moratorium, which simply means the RBI has allowed banks 3 months until May 31st when borrowers can defer their EMI payments. So if you are a retail or a corporate borrower and have any kind of loans running such as vehicle loan, home loan, personal loan, education loan, agricultural term loans or crop loans, you can afford to delay your EMIs till May 2020 and it will not be treated as a default. All banks, financial institutions including housing finance companies, non-banking finance companies, small finance banks or regional rural banks will provide this moratorium to their borrowers. All your credit card dues will also be eligible for the moratorium. Your credit score will not be adversely affected either. However, it is important to understand that it is not a concession of any kind and you can only postpone the payment. Also, many borrowers might have already paid their installment for the month of March. So you could also benefit only for the next 2 months. So should you really go for this moratorium? Well, moratorium is not a waiver of any kind, so your interest will continue to be charged for this time period and it will get added to your outstanding amount and therefore will increase your burden when the moratorium gets over. While the burden of additional interest could be really manageable for home loan borrowers given the prevailing benign interest rate regime, this may really not be the case with credit card users. Since credit card loans fall under unsecured loans, the interest charged is exorbitant, upwards of 40% per annum. And interest accrued on your credit card bill could actually balloon to an unmanageable amount if you do not make attempts to clear the dues now. One more reason to opt out of the moratorium could be the fall in interest rates. The RBI has also slashed the repo rate to 4.4%. This will mean huge savings on your interest outgo for retail borrowers, particularly the ones whose home loans are linked to the repo rates. So opt for the moratorium only if you are facing a huge liquidity crisis.